Welcome to the CLS Market Review for the week of February 17, 2014. I'm Steve Donahoe. Most investors have noticed the uptick in volatility lately. Given the propensity of the media to spur fear and panic, investors need to take control of their investment strategy. Working with professional money managers like CLS can certainly help in these situations. With the ebb and flow of the markets, many investors can begin to feel anxious about their portfolios and making further contributions into their retirement programs when stock prices are falling. Diversification is a key to building a portfolio that can help you weather the storm of volatility that is common in the stock market. Diversification means building a portfolio from a number of different assets so that if one of them performs poorly, it will have less impact on your portfolio than a less diversified portfolio. In order to build an appropriately diversified portfolio, an investor really needs to understand their true risk tolerance, which is hard to gauge. Many investors feel like they can take on risk when stocks are increasing, and many investors feel like they do not want any risk when stocks are falling. The key is to find that risk tolerance you can bear whether stocks are increasing or decreasing. A tricky endeavor for sure, and it also is important to remember to not get caught up in the headlines of the day, whether positive or negative, but to concentrate on your goals. To an investor trying to go it alone, building a diversified portfolio can feel like trying to keep all of the balls in the air at the same time. For a professional money manager, it's what we do every day. While an investor may review their risk profile annually or after certain life events, CLS measures and monitors risk in our clients' portfolios regularly. That is what our risk budgeting process is all about. We look at and measure the risk of the different asset classes. We monitor that risk and ultimately reallocate the portfolios in an attempt to take advantage of the changing risk environment. Risk budgeting is a true modern portfolio theory approach, and, as history has shown, it works for investors in helping them meet their investment needs. Despite history showing consistent risk works, tactical management is an attractive option for some investors. These investors may have an extreme fear of portfolio declines or a short time horizon. Given these constraints, they want to decouple from their benchmark when the market is falling. CLS also has a more tactical approach than our core risk budgeting process through our shelter volatility management process, which attempts to de-risk portfolios as market conditions change. Our approach is not a simple all-in or all-out strategy that is typical of tactical management, but rather attempts to control the volatility in equities early in downturns before moving out of the market if the environment gets more severe. To learn more about risk budgeting and our other risk management strategies, talk to our sales folks or visit clsinvest.com. That concludes our update. We hope to see you back next Tuesday. Have a great week.